Apabhai joins me right now, trading strategies head for Citigroup, global markets in Asia Pacific. Now, Mo, thanks for coming in this morning. Interesting is certainly a word you could use for this. I've got to spin forward because this week it looks like a more or less wait and see, put your seatbelts on, hang on in there until Friday when you see Ben Bernanke. For really after, it's his fifth Jackson Hole speech, but this time the world really is listening to every single word, ambiguous or not.
Yeah, I think everybody is listening to everything he's saying, and I think we were here last year and the year before in exactly the same position. I think there is a fair amount of speculation, though, that we might not have to wait until Friday. There's already talk in the markets about emergency meetings at the Bank of Japan, at the Fed, even at the Swiss National Bank, and I think what we might be looking for is some coordinated action that may happen even before Friday. So markets are definitely pinning their hopes onto that lifeboat.
Coordination, I guess the Swiss and the Japanese, is probably that currency. What do you see that, will that include the US coordination?
Probably yes. I think what we are concerned about at the moment more than anything else, even more than the probability of a recession, is actually stress in the money markets. And we've started seeing US dollar funding rates going up, and all the news that has been coming out, like the denial of a France downgrade and all the other things that people have been worried about, have been denied, but the markets continue to remain stressed. So something on the money markets is definitely something that could happen on a coordinated basis amongst all the global central banks, and that would be received, I think, quite positively by the equity markets.
But it's only a bit of plaster, isn't it, over a pretty deep cut?
It is, but I think you've got to start somewhere. You've got to stop this downward spiral that we're in, and I think at the moment what the markets are doing is they're ignoring all the good news. Even if you get a denial of a bad story, they just move on to another story. Remember, 2 weeks ago we were worried about Italian and Spanish bond yields above 6%. Now they're below 5%, and the markets just completely ignored it.
Joe Biden, actually, of course, was finishing off his trip yesterday in China. He says that the US downgrade was very disturbing and bothersome. You got Angela Merkel yesterday talking about the euro situation, so then the markets want to force us into doing certain things, and that we won't do. I had a guest this morning who said, formerly of PIMCO, he says, well, she has no choice.
I would agree with that. I mean, I think the big problem that we have at the moment is that our view is that, or my view is that there is no recession as yet, but an equity market sell-off which triggers off very significant selling from institutional investors, which we haven't seen as yet, could actually tip the global economy into recession. So they do need to pull out the stops right now. We believe that we're at the point of the liquidity put where that liquidity does need to be exercised right now.
Yeah, I haven't seen that as yet, you say, but how would you categorise last week's sell-off? And of course the banks in Europe, for example, down 20% each this month so far. I mean, how do you quantify a sell-off? I mean, and what?
Well, I think at the moment what we've seen is a revaluation of growth. So we were too bullish coming into the first half. Now I think people have turned too bearish into the second half. What you're now looking at is the potential of things going a lot more systemic. So you go down from here, you'll really start to see people questioning the systemic risks, especially amongst the financials and the insurers. Even in Korea, for example, over the weekend, the regulators have asked the insurers to check how much money they've still got in their accounts.
When you came into work this morning, Mo, with the team and clients calling in, they say, Mo, please tell us what's going to happen this week. And you say, I haven't got a crystal ball. But Friday, it's all about Friday. But I mean, are they just holding on to their cash? Are they putting it into their gold price? Will it hit 2,000, for example? Is it just save, risk averse? Not
really. I think what we are seeing is a lot of the hedge funds are still shorting the market. They're shorting the futures. They know that there are levels in the markets. You know, things like index arbitrage activity in Korea is very predictable. It's a surprise that it's still going on. So the hedge funds are still quite bearish and going after the market, but the long-only buying is actually stepping in. As I came into your studios this morning, we were actually seeing some very significant buy tickets coming in on the long side. So certainly there is, it's not all doom and gloom as yet, but certainly sentiment is very fragile.
And in the FT this morning, there's a piece about mutual funds and how Asia really is buying into that. Just one of those small article, big article in fact, front page. But I mean, is Asia, just a final question, is Asia really grabbing the investor attention right now? Let's go to Asia. That's where the growth is, albeit with inflation.
I think at the moment the markets are just worried about whether we're going to see a global de-risking going on. Otherwise China and India would be massively outperforming, and they'd they're doing okay, but they're not doing that brilliantly. I think that is probably the place where people are going to be focusing on, but what we need right now is for markets to stabilize, the risk managers to move slightly out of the picture so that the investors can actually start looking at the markets in a more rational manner.
Risk managers go on holiday and come back at Christmas, right?
Well, we need to get rid of all this mass panic that there is in the markets. You know, Korean retail margin loans down the most since October of 2008, so that tells you a lot about how the markets have behaved.
Mo, thanks for coming this morning. I know you're a busy man as well. Thanks for coming. Mo Apabhai there, the head of global strategies at Citigroup Markets in Asia Pacific.